Today, I want to talk to you about the financing contingency period. This is one of the most critical periods in your purchase and sale agreement, and I want to get right into it. So, the financing contingency period is the time during which your lender has to process and underwrite your loan. If you are paying cash, there is no financing contingency period. Now, let's say that your financing contingency period is 21 days and it is day 20, and you still haven't gotten notification from your lender as to whether your loan has been approved or your loan has been denied. Hopefully, your real estate agent is on top of it and is in communication with their contact at the lender's office to determine whether or not an amendment is necessary to extend the financing contingency period. If you request an amendment to extend the financing contingency period, there's a chance that the seller may ask you to put down some additional earnest money, and that additional earnest money would be non-refundable if your loan doesn't get approved. In the event that your loan is denied and the financing contingency period has not expired, as long as you transmit proof of that loan denial, you can get your earnest money back. If your loan is denied, but you don't timely notify the seller that the loan has been denied, you can terminate the contract, but you may not get your earnest money back. If the financing contingency period has expired and you have not notified the seller that your loan was denied, you can terminate the contract, but you are not going to get your earnest money back. So there's a lot at stake here, and that's why it is so important for you to stay on top of what these dates mean. Another thing to keep in mind, in the Georgia contract, there is a space to designate what the terms of your loan are: maturity or term, interest rate, whether it is conventional financing, or an institutional lender or some other type of lender like a hard money lender or a private lender, and the name of the lending institutions. If you put a lending institution's name in that portion of the financing contingency, the only denial letter that is acceptable for you to get your earnest money back is from that lender. If you leave it blank, then that denial letter can come from any lender. So that is a really important nuance to keep in mind. Also, let's say that you have filled in, or your agent has filled in, 3% interest rate on the contract, and the loan that you are approved for has a 5% interest rate. Technically, you could terminate the contract because the terms set forth in that financing contingency exhibit specify a loan of X number of dollars. It's really a percentage of the purchase price, a term of X, and interest rate of 3%, but your lender is offering you a 5%. You could terminate the contract. So that's one reason why it's really important for your real estate agent to reach out to your lender if the pre-approval letter that they've received from your lender does not specify what the terms are, because we don't want to write a contract with terms that don't work. If from jump it appeared that you were going to get a loan with a 5% interest rate, it would not make sense for your realtor to put in 3%. But if they don't know and they don't ask, they could be setting you up, for a problem.